Hello and welcome back guys to the channel, and on today's video guys we are going to start a brand new series which is technical analysis. And today's video is basically going to be more of an introduction to what technical analysis is and how do we use technical analysis in trading as MMC footprint traders. So before we get into it, make sure you like, subscribe if you haven't, turn that bell button on for notifications, and let's get into it, guys. So what we talk about when we talk about technical analysis, right? Technical analysis is simply, in a simple sort of sense, right? It's simply using only the data that's presented to you in this specific chart, right? Analyzing this data and knowing what the market has been doing in the past, what the market is doing in the present, and what the market will be doing in the future, right? Regardless of fundamentals or reports or anything else, right? We simply use only the data presented, which are the candlesticks, to analyze what's price doing from the past, in the present, and in the future, right? So that's the overall simple basic sense of technical analysis. Now, we as MMC footprint traders, we have our own way of analyzing or conducting that technical analysis, right? Which is in form of three simple or three major things that everything is embedded into, right? And these three things being structure, S&D, and confirmation, right? So these are the only three things that we as MMC footprint traders use in our technical analysis in analyzing what price has been doing, what price is doing, and what price will be doing, right? So now there's a chronological or strategic manner on how to route these things together, right? On how to marry them to get one hell of a combination that will be on a massive basis to you guys in understanding the market, right? So first, we're gonna talk about structure, right? So when we talk about structure, we know that price has a tendency of creating highs and lows in terms of a bullish market, and lows, lower lows and lower highs in terms of a bearish market, right? Now, the main thing that we're going to be focusing on structure is this overall, or in other sense, we're going to call it the major structure, right? The order flow structure. That's what we're basically going to be dealing with, right? This overall structure, and not this intermediary structure that lies within the major structure, right? So let's term this as so per se, right? So this is like a 4-hour chart, right? A 4-hour chart, right? So meaning that this impulse on the 15-minute will be something like this, right? Will be something like this in the 15-minute, right? So in here, you also find what higher highs and higher lows being put into place. Now, these, we're not going to be dealing with intermediary structure. So you have to be very, very, very specific with the time frames you're using in order to avoid confusion, right? Per se, you want to start doing your analysis in the hourly chart, right? So this is okay. So let me clear this. Boom, understood, right? So let's rename this and say that, okay, so per se this is like the 1-hour chart, right? So from the hourly chart you have your structural impulse. So once the structural impulse has been done, right, you should mark your low and your high, right? So once you now have your high and your low, right, the overall high and the overall low, regardless of whatever highs and lows lies within here, right? So once you have that, and notice, like, one thing that you should avoid the confusion in is that your structural impulse should have a break of structure in it, right? So this structural impulse should look like this, right? There has to be a break of structure to validate your structural impulse that, okay, this is a valid one. Okay, so pardon, I got a call. So as I was speaking, right, you have to have a break of structure to validate your structural impulse, right? So once you have that break of structure, this structural impulse to the top side now becomes what? Valid. Meaning that once you have a valid structural impulse, right? The next thing that you're going to look for is what? The S&D zone, right? The supply and demand zone, in which, as we said, right, in a bullish market, we're gonna have what? Demand zones, which are what? The last down moves, right? The last down move before the up move started. The same applies to a downtrend, right? We're gonna have what? Supply zones, which are what? Right? The last up move, before this overall down move started, right? So these are the supply and demand zones. And if you don't know what those are, make sure you watch the whole package of the supply and demand videos for you to be able to get on point and understand what's fully happening here. So from this structural impulse, right, we now have to identify what our demand zone, right, which is probably what last down move before the up move started. And once we have our demand zone, right, the last thing that we're going to be looking for is what? Confirmation, right? Confirmation in terms of what, right? So people have this tendency of confusion, right? In confirmation, we want to see confirmation in the lower time frames in terms of the transfer from weak to strong hands. In other words, you can say like the shift of market structure, or what? Yeah, it's basically, or you could identify that confirmation in terms of Wyckoff, meaning that in a bullish market, you're gonna want to see a Wyckoff accumulation schematic, right, to go bullish from it. Or in a bearish market, you're going to want to see a Wyckoff distribution schematic to go short with it, right? But I'm not going to talk about Wyckoff. If you do want to learn about Wyckoff, there's a whole and a full package of videos concerning Wyckoff free on the YouTube channel. So, you could work your way up through from there. But we're going to be talking about the simplest ways of confirmation as possible, right? Because we don't want to add confusion, since we will be going deep and deeper as the episodes goes on, right? So this is episode 1 on the introduction, or part 1. I will figure out the naming later. So the confirmation that we're going to be seeking is, simply just like this, right? We have, from the high time frame, we have a structural impulse to the top side, an S&D zone, right? So, right, let's say something like this. So from this S&D zone, right, price will make its way back down here for what? Mitigation, right? And once this mitigation of this S&D zone is done, then price will now want to what? Shift and go to the top side with the low as its next what? Liquidity run. So our confirmation will be taken here at the point of impact with of the pullback and the S&D zone, right? So there, so this is our S&D zone and price taps here. So with price tapping here, right, I'm going to use this pathway to make it a little bit more vivid, right? Boom. So with price tapping here, right, this is what we want to see in terms of confirmation, right? And then the runner, right, to the top side. So this is what we basically want to see in terms of confirmation. What we want to see is price going low, 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 lower and lower. And then price now should stop breaking lows and instead should break highs. Now, once this high is broken, that's already a break of structure to the top side. So once the market is now breaking structure to the top side, mind you, all of this is configured or confirmed in the lower time frames, right? So let me take that back. So with now price breaking structure to the top side, meaning that the intermediary bullish trend that was established in order to make that pullback for the mitigation that was required in the S&D zone is now over. And what we're looking at now is a simple transition from weak to strong hands, meaning that the pullback is now coming to an end, and the bullish people, or the bullish force, or the bulls, are now stepping back to the market to take price even more bullish. That's why we're considering the overall high as our next liquidity run. Lo and behold, what we want to see in the lower time frames is something like this, right? So as you can see, price goes low, low, and low. Then price now stops breaking what? Lows, and instead comes up to break what? A high. So once the high is now broken, then we're gonna want to see a simple pullback towards what? An S&D zone lying in here. Mind you, once again, this is all done in the lower time frames. So once now we have that pullback, this pullback will be our entry, right? So pullback touching the S&D zone, that's our first entry to take price bullish to the top side, right? Yet again, price will break, like for the second, third, even fourth, right? Or sometimes it may only break once, test and, leave that runner, right? With no re-entries. So, but in terms of, in its most common way, right? Because we have tested this over time, right? In its most common way, price will most likely break once, tap, right? Entry one, break twice, right? So the second break, and then the retest for the what? For the re-entry if you did miss the first entry or you want to add more positions, right? And once this is done, price may or may not tap for the third time, but up to there, the trend, the newly established bullish trend, intermediate bullish trend, is more likely to hold. Why? Because this right here, with the first break and the second break, has already confirmed the Dow theory of structure, which talked about the double breaks of structure, to indicate a more potent structural impulse being put into place in the market. So that's this was just a simple insight, right? We're not going to talk about these theories and whatever, right? I'm just simply giving you guys a simple insight for you to use in your approach through the technical analysis. So this is how we do our confirmation. And once this confirmation has been obtained, you now have your first entry and your second entry, probably maybe with a third entry, right? And you are looking to take price bullish to where? To the overall high. Why? Because this is our next liquidity run in the higher time frames, and it's more likely, more often than not, to hold, right? So with that being said, let's go and take a look at, like a few examples from the trades that even I myself took on the basis of everything that we've said in here, right? So let's go back, and so this is like the gold. I normally I'm a day trader, so I more often than not use the 15-minute chart. So we had this beautiful analysis. I think I did this in the 1 hour. Yeah, boom. So lo and behold, I had this analysis. So let's now start to check our boxes, right? So first thing is first, structure, right? The first S. What's our structural impulse, right? So we had structure pushing what? Bearish, right? Lo and behold, we now saw what? A break of structure to the top side, meaning that this was now my structural impulse to the top side. Lo and behold, from the structural impulse that did cause a break of structure, I then went and looked for a what? A supply zone, right? I mean an S&D zone, which in this case is a demand zone. So lo and behold, the last down move before the up move started here. So this was my overall demand zone. Why? You can go and watch the demand zones videos, the supply and demand zone videos, and you will fully understand why. So what I waited for was the retest, right? So price just waiting for the retest for price to reach here, and once price reached here, we now drop down to the lower time frames. As I did say that, I was basically looking at this from the 15-minute chart, and I went to confirm it on the 1-minute chart. Let's see if that data point will still be available to us. I hope it will. Boom. Yep, it is. So this is the area that, price came and touched the zone. So from this area, what do we see? From this area, what do we see, right? So we have now price going what? Lower, right? Bearish with these breaks, bearish again with that break, bearish again with that break. Lo and behold, price now stopped breaking lows and instead went up and then did what? Broke a high. So that retest, so this is entry one, right? The break again, right, to form this high, and then the retest, right? Entry two, right? With your stop losses below this low. Why? Because this is the protected low, the low that's holding the bullish structure. Why? Because if we see this low being broken, that means the bullishness in this market is not yet ready, right? So in order for this market to remain bullish, this low should be held and should not be broken. And that's exactly what happened. So taking this you know, like long position here, the SND I was looking at was this one. So boom, the stop loss was below the low, and the final take profit target was way up here, right? Boom. So these are this is how we take our trades as MMC footprint traders, right? This is not rocket science, guys. It's all accounted for, right? It's part of the process. Once your level of understanding reaches here, this will be as sweet as milk, right? So this was simply a 1 to 12 hour trade, right? I didn't take the re-entry, I just took the first entry, and that was it. So that's how I took my trade. And as you can see, price just ran bullish from here. Price just ran bullish from here, and you know, price just went on and went on, and finally this that line was crossed. So this was like the TP line, but of course, you know, like you know, the risk management part is all up to you guys. So that was trade one, and let's now actually get back and see how we took the other trades, right? So I'm just looking to make this short, as short as possible. So we had this low being broken, and once this low was broken, we had also some trades here, but I'm not going to talk about them. Let's just see one more trade, like in another pair. That was EJ. Yeah, I did trade EJ. So I had this analysis on EJ from the 30 minutes, and as you can see, right? So let's dive into this price action and see what exactly was happening in here, right? Because it looks messy, right? Okay, so we had price pushing bullish from this area here, right? We had price pushing bullish, creating a high, a low, right? Lo and behold, a high, right? A low, right? Lo and behold, a what? A high, right? A low, right? Lo and behold, this now, what? This depletion of price, this failure of price to come and break the structure. Lo and behold, from this area here, what did price do? Well, so from this area here, what did price do? Price came down and took out this low, meaning that this is what a breakout structure to the downside. Okay, so now we have a breakout structure to the downside. The next thing is what? Looking for that S&D zone. Lo and behold, right? I have taught this that wicks themselves stand as their own S&D zones, right? So price comes back up, taps it, leaves, right? Breaks again, right? So this is actually the trade that I took. I didn't trade this one. Nope, I did not. But this one here, right? So this is what I want to talk about. So we had this, so let me put this pretty much clear, right? So from that low to this area here. So shit, we had this as what, as a breaker structure, and once that structure was broken, right, the next thing I was gonna look for is what? The S&D zone, right? The last up move, right, before the overall down move started. Lo and behold, this here was my S&D zone, in which I was just going to wait for price to come back up, tap it, and then confirm this area to take price short from here with this low as the next liquidity run, right? So as usual, we drop down timeframes and we go to confirm this, right? So here, right? So come on, okay, boom. So this is what we had, right? Let me zoom in, make this a little bit more vivid to you guys. Boom. What did we have, right? Okay, that's a little bit too much. There, right? Okay, boom. So lo and behold, what did we have? We had price what? Pushing bullish, breaking again bullish, right? Breaking again bullish, right? Breaking again bullish, right? Breaking again bullish, breaking again bullish. And from this area here, we never broke this high. Okay, so price is now failing to break this high, but instead what's it doing, right? Price came back down, took out this low, right? So that's a breakout structure to the downside. The bullish trend, the intermediary bullish trend that was established to make that pullback and the mitigation is now over. So what's next, right? Price makes a low from a high, structural impulse, right? S&D zone, right? The last up move before the down move. Price comes up, tests the supply zone, right? So in this case, it's a supply zone since it's a downtrend, right? So stop loss, that's your trade. Stop loss above the high, and you know, so I did put this at 6 pips intact, right? So my stop loss was pretty much come on, 6, boom, there. So that was my stop loss, and my take profit target is, you know, the same, right? The overall low, right? Boom. So we go there. So this low right here, this low right here, right? As we talked about it. So this was the overall next liquidity run from the higher time frames, right? Lo and behold, so this was the trade, a beautiful 1 to 18 hour trade, you know, as easy as it comes, right? So this is the beauty of technical analysis. And uh, let's end it here for today. And, you know, I hope you enjoyed the video. And if you did, make sure you like, subscribe if you haven't, turn that bell button on. And if you're interested to go way much deeper on this stuff, make sure you Instagram us at official Green Pips FX, and we'll be more than happy to have you on our premium community, right? Where you can surround yourself with pro traders, people who have over 8 years experience in the forex markets. You know, it is or it is, right? So I hope we had a nice one, and more stuff will be coming on with the future episodes on technical analysis to come. But for today, this is as far as we go. And, you know, stay safe, everybody, and peace out.